Hi traders, Nick Shaheen here, recapping week ending October 17th, 2014. Um, to say that this was an exciting week, it's an understatement. We saw major swings in the market, major movement every day. We're talking thousands of points up and down in tally. And it could have been so much uglier, but this was an important week, and I'll get to why. First, let's recap today in order to close the week. Today is Friday, obviously, options expiration. It's a monthly options expiration. So, at the end, we had some shenanigans going on. We opened very, very strong. The small caps had been leading the last 3 days, even though when all the other markets were red, it was up 1.5%. So today they took a little break. They closed slightly red just because they ran into some resistance, which we saw coming. So they have the right to take a break. Today, however, the rest of the indices took over. Even though I know there's going to be some people, poo-pooing over the fact that, oh my God, we were up 2% and we barely closed up over 1%, or the Dow was up 1.6% at the end of the day. Any which way you slice it, that's an incredible move. So if we want to cry over a plus 1.6%, I'll take it. We should have cried over yesterday the TLT, which are the bonds that were up 6%, or whenever they flash crashed, they were up 6% and they let go most of it. So we didn't say anything bad about that, which would have been bullish markets. But anyway, I'll take the win. I'll take the greens. A lot of technicians still calling for more downside, that this is just a stop. I present to that, maybe so, maybe not, but I present to that the opposite viewpoint of what happened this week. I know I said I'm recapping the day, but I'm going to start with recapping the week. The main thing that happened this week is we got tested, and we as the markets got tested hard. What do I mean by hard? Volumes were way above normal. Yesterday volumes were insane, and so these high volume tests and then the rejection of the sell at with volume, so it's not like a meaningless bounce. Hey, they really tried. It's not like they half tried. They really tried. They came at it with big volumes and then they got rejected. So let's go there. Let's go there. This let's switch. This is a weekly candle chart. So every candle is 1 week. And we'll start with the SPY, S&P 500, and this is the test I'm talking about. Okay, the thistle down here is that is the rejection of the test. So it was a horrible week starting. They tried to sell the heck out of it, and they did. They went down all the way to the bottom end of this candle, almost revisited the lows of recent. This is 1 year and weekly. And look at the volume. This is the shaded. This was last week's volume, which was also high. I think it was the highest, if not the second highest. Either this week or that week were high. And this week dwarfed it. It's all the way up to here. So volume is significant. So this test counts. It's not a frizzle. This test, this week, very light volume. You can argue, it didn't mean much. This means a lot. Okay, so having had a candle that could have looked this ugly and it wasn't, says a lot, and I take solace in that. Yes, the long-standing trend has broken, but who cares? It's where we go from here. That's what I care about. And let's look at the Qs, which represent the Nasdaq. Same thing, big test, big volume, rejected the bottom and closed. At one point we were much higher than that, and the important thing is that we pierced this trend, which was if I zoom out, it's to 2 years. I'm going to just extend the same chart to 2 years. Got tested, kind of got tested right here, got tested, we pierced it, but luckily we closed over it. Technicians might argue that this is just hogwash, but it's something to shoot for, in my opinion. Okay, so if I wanted to look at the small caps, let's do the IWMs so we can see volume. Green candle. Oh my gosh, we haven't seen a green candle in 6 weeks. After 6 weeks, a green week for the small caps. And they were the ones that led us down here. They were the ones that actually corrected over 13%. So they were the ones that were, we had this triangle forming here and it broke down. We lost it right there and then we carried it down. Did it satisfy that break? Close enough for me. Look at the volume. So this test came on, this rejection of the lows and rebound came on heavy volume. So I listen to it. All right, I do listen to it. Head and shoulder-ish in theory there. I can eyeball maybe a little bit more to go, but given that it rejected it here, unless we have another new headline there, I'm not so sure it's in the cards plainly. So what about today? What did I see today? And this back to today's look. These are intraday. What I saw today is markets ripping at the open, which for the last couple of days I've said it's been opposite day, where the pre-open the 2 days before today. So the last 3 days we've had opposite days. First part of the week we were selling off in the morning. Ripping in the morning and then selling off the close. And then suddenly 2 days ago we decided we woke up to just hideous futures in the US and we sold off hard but then rebounded hard both days, especially on the small caps. So I said, hey, it's opposite day. So twice in a row was good. And today we opened hard and then we didn't break apart. Yes, we sold off a lot of it, but we're up over 1% across the board. Small caps weren't, but they had a green week. So it wasn't bad. It was an awful test, put a lot of people at unease, but we came out of it okay. The long thesis came out of it okay. I'm not a bull. I'm not a bear. I sell spreads, so all I care about is just to stay within the expected range. And our expected range is held for the most part, especially if you take the range, which I do. I figure out a range and then I trade outside the ranges. So what about next week? We're going to come into next week, hopefully, with some positive momentum. Now, having said that, I say that because of I'm hoping that the weekend will be quiet headline-wise. Although today a thing of note was the fact that we opened with a bad headline. We opened green. I found out this morning, like a lot of other people out there, that there is a third person who was exposed, and they're on a cruise ship, a healthcare worker. Yet we rallied, so we had some reason to sell off headline-wise, and we didn't. Fundamentally, we got reminded that the Fed here and abroad, they're behind us. Whether they can do or they're going to do whatever it takes to keep us out of trouble, us being the globe. So the safety net is still there. Just take the headlines in stride and trade. So we should come into the week with positive momentum. I think the oil being down is hurting the Russia, so the struggle there they might be open to more talks, less hard line. As far as how to trade next week, these are tough times to trade for professionals, let alone non-professionals. So I would suggest that you trade for fun next week. How can you make it fun? This is something you're not going to hear everywhere. Trade for fun, a whole lot of earnings, starting with Apple. Why not take a few debit spreads for fun? Nothing that'll break the bank, but something that'll pay up if you guess right. All you have to do is guess the direction, right? So if I'm bullish Apple and I think that the market will like what they have to say, then I buy debit call spreads in Apple. Where do I buy them? I don't know. I think, somewhere around, there is resistance at 100. It's been there for a while, so and it's expensive to buy at 100. So I'll move up maybe $3, $4. There's also heavy resistance at 103. There's definite resistance at 107. So I want a real lotto ticket. I'll buy a cheap one over 107, which is very unlikely to happen. But let's say Apple jumps up 10%. That'll pay big time. So you pay 10 cents and you end up getting paid gobs. Or if you're bearish and you think that everybody's going to spit on Apple, and just like they did today with Google, then you would do the opposite and buy some debit put spreads or some puts and use the same week because you have 4 days to make them work. And somewhere around today, this week, there was interest, strange interest. Let's go to the pictures in the 95 level. So I'm just giving you what I saw this week, and I kind of predicted it almost to a T twice. There were two open positions that made me look at it, and let's go with I don't think they're done with the 95 level, which is the bottom of the candle. So if there's bad news in Apple, or if they're going to sell it, I think they're going to revisit the 95. But let's be optimistic. But you flip a coin, your guess is as good as mine. I'm just looking at levels. That's how I would trade for fun. One note this week, Priceline held up super strong. Why am I surprised? Because they are highly leveraged to Europe. And if Europe is in the dumps, why isn't Priceline selling off? Also, they are highly leveraged to travel. If Ebola scare is going to cut travel, why are they running up? It also got downgraded in price a couple of times, price targets, and it didn't sell off. Things to note. This is a momentum stock. So again, this week was a super strong test. Everybody got tested, and most everybody rejected the test except for Netflix. Sorry for you guys who are long Netflix. Too early to jump in and buy it, in my opinion. So trade for fun. Next week is going to be another test, but it all depends on how we handle Monday. A, headlines. I don't want headlines. B, however we open, if we open strong, I want us to remain strong. I don't need to see 2% rips, but I need to see stabilization. The momentum, the pendulum, I need it to stop swinging so far back and forth. It makes it hard for everybody to make money. So thank you for the time, and this has been a quick recap from Nick Shaheen.